if it's the same property management team, um, I mean, how is the payment collection different? It's the property management that collects the money, right?
Right. Did you say if it's the same property management team?
Yeah, you've kept the same property management team, didn't you?
No, no, we didn't.
Oh, why didn't you keep the one that was in place?
I mean, because they're loyal to the seller. We got better rates, better terms. Um, so yeah, no, we wouldn't keep the same one.
Oh, okay. So it's a new way to collect, I guess, and new people for the tenants, so they know um, it might be a little different for them.
Right.
I have a question on that. So basically, do you like find these PMs mainly on like rate wise? Like, I guess do you consider just like actual professional services in terms of like quality wise? Do you ever like consider that into like when it comes to picking the PMs?
Well, I'm sorry. Say that again, Eugene. What was the question?
Yeah, so like we're talking about just like picking these PMs or switching the PMs based on um changing the way we intake the money, but on top of that, it's like we get better rates compared to the current standing operation, right? So
Right.
the question is, do when we look for these PMs, do like what kind of factors are we also looking for, should we be looking for when it comes to maybe just like the I guess like the resume professional services that they provide. um I don't know if you're getting where I'm getting at.
Like, what do you look for when you're hiring?
These PMs outside of, I guess, just like the financial aspects of it.
Yeah. I mean, so their location, their experience level, how many units or properties do they manage currently? Um, what's their process? What's their I think I put on the school platform, I think a questionnaire on questions to ask when you're interviewing property managers.
Hmm.
So take a look at that. But yeah, what's their marketing strategy? What is their collection strategy? This particular property management company, this was a client of mine who broke off on her own and started her own thing.
Hmm.
And we have a whole website that they've created. They have a whole back end accounting office that we use that does all of our financials. I mean, they've got an on-site person. Um, they've got a ton of experience, been doing this for a lot of years, and like it's hard. This property's in Milledgeville. Luckily, they have someone in Milledgeville local. But if they were trying to run this out of Atlanta without anyone down there, it'd be pretty hard to do that. But yeah, those are some good questions.
Then I remember, I forgot his name, but the one with the whole like I guess all the previous four that you worked on, he talked about how he ended up just making his own PM company. So
Yeah.
do you remember like what, I don't know if he even mentioned it, but do you know like what got him into just like considering that option where he ended up just like going into the path where he makes his uh
Yeah, I've been told that it doesn't make sense to start your own property management company unless you've got like 1,000 units or more.
I see. So it's just like unit size make.
Yeah, it's basically unit size because it just takes a lot of work to run the company. And it's a lot of overhead, it's a lot of time and effort, and the fees don't really make are not really worth it unless you've got a volume based type business.
Gotcha.
Um, sorry, I've got a little bit of a head cold today. But yeah, so and the other thing is, you got to shed the bad habits of the prior ownership. And so in this particular case, like Dante was saying, by the 10th of the month, I think, they would have $15,000 outstanding, and then those tenants would, they'd wait until payday to pay their rent. And payday maybe this Friday, and so there would always be a delay, and the seller, they just put up with it, right? And so we're coming in, and this property management company is pretty, on the ball, and I mean they're very on the ball. Like if you don't pay by the 5th, you get a demand letter, and if you then don't pay by the 10th, 5 more days, then you get an eviction notice, right? Then you got to go to court. Within, you gotta file the eviction, they gotta be served, and then they have 7 days to respond. You can pay your rent in that whole time, but this is something that the seller was not doing on the residents at all. So it's really about, weeding out the people that were taking advantage, or just letting them know, hey, there's a new sheriff in town, and you guys are gonna play by our rules now, right?
Got it.
Yeah.
So that means you've already sent letters of eviction. The property management team has already, because it's the 10th of the month.
Yeah. Yeah, exactly. Yeah, I was actually, let me check with her. Yeah. Yeah, she said, and I have her cell phone, so I'm texting with the property manager, and I guess Dante, you probably are too, just to kind of let her know, hey, if you need anything, let us know. We're here for you. We're the owners. Let's see, what did she say? Yeah, 35,000 we've got, so we're about 20 grand short. Yeah, letters have been sent. They've heard back. She's heard back from a few tenants. They're waiting until payday. And then she asked us, and see, this is why I like this particular property management company, because she asked me, are you guys thinking of doing a special to bring people in, right? To increase the occupancy. And I think that's a great idea. So no application fee. You could waive the admin fee, or you could do first month's free rent, or half off the second month. Must apply by a certain date. Run the special for 1 month. Have everything come back clear to receive this. First come, first serve. Have this for the first 20 to 25 people that check out. Good. Because a lot of people in this is kind of a class. I mean, I wouldn't say it's class C. I mean, it's probably class C plus maybe. Sometimes you have people that really take advantage of these specials, and they'll jump in, and they just are moving apartments every couple of months. And then, but they'll get a track record, and you can check their credit to see if this is something that happens quite frequently.
What do you mean? What do you mean, Todd, when you say that they I guess use the specials every month? You mean like if you give like a 2 months rent free?
Yeah, exactly. They'll come in, you give them 2 months rent free, or our 1 month, first month's free, second month half off.
But you guys don't normally when I when I used to do it in the past, when we had the 2 months or the 3 months free, we'll always break it down, and we'll just basically credit it each month. And instead of having a 12-month lease, we'll do something like a 13 or a 14 month and credit that 1 month based around that entire thing. So they never really have a month free that's just completely empty. And we're never really, in the hole for an entire month without.
Yeah, that's a good point. So you would do, so if it's first month's rent free, you would sign a 13-month lease.
So if it's a first month rent free, we'll put something in the stimulation where we're gonna say if the rent is $1,200 a month. We'll say, instead of you being able to get that first month free, you have to do a 13-month lease. So we'll take that $1,200 and we'll break that down within 13 months. So that's basically like anywhere between like $90 to $2 to $3 a month that would be credited on your actual rent. So you're still getting the first month rent free. It's just been, subtracted on the overall rent throughout the 13-month period.
So you would take $1,200, you divide it by 12, and then deduct that from once a month over 13 months.
Correct. Instead of just giving them the whole, to kind of avoid that whole situation where someone comes in, attack it, and leave. And then it kind of release that whole situation with those guys who come in with those CPNs, those secondary credit numbers, where they go ahead and, basically go ahead and make up this social, and then they go ahead and add primary trade lines on the social, and then the credit score looks like a 700, and then before you know it, they'll come to your actual building and apply for an apartment. You let them inside, they instantly stop paying, and they really have nothing to lose, because even if you file for an eviction, it's not going to go on their personal credit anyways, so they don't really care.
Right.
And you have a lot of those, especially in the Atlanta and the Georgia market. They're like notorious for that.
Yeah, 100%.
Mm-hmm.
Yeah. What are your thoughts, Dante? What do you want to do on this one? How do you want to handle the occupancy and the collections?
Well, I think we got to do it aggressively, which is that's going to probably bring our occupancy down for a minute. But because of what we just talked about, hey, yeah, spacing it out over 13 months or 15 months, I was saying, hey, they had to sign a 15-month lease to get a 1.5 month credit. So you just keep them in longer, and if they do sign a second lease, it's they've been there for 3 years, only just signing twice.
Right.
But yeah, we're gonna probably lose a couple tenants because of this, but we got an aggressive PM that is gonna make this happen. So that's I'm pretty comfortable. The only thing I'm comfortable about is the maintenance, the operations, getting the tenants happy.
The tenants that's not paying for you guys, for their previous, are these reoccurring tenants who's always been late, or these are new tenants who just jumped out the window?
I haven't actually checked it that close, to tell you the truth, but that is a good question.
And what did you guys do pertaining to informing the tenants about the transition? Like, did you guys send out some form of a notice and let them know what you guys?
Yeah. The property manager put a letter on each tenant's door, letting them know, hey, the property's been sold, pay your rent to this account.
And did you guys put out anything pertaining to what's to come, like to build that form of incitement? Because you don't really know what happened prior to, and they might feel like it's just in the air, or could be going into foreclosure, all type of crap.
I mean, I don't think that was a part of the notice, no.
Okay.
No, not at all.
Yeah.
Well, I mean, hey, I'm going down there again this week, end of this week, to talk to her face to face again and see everything that's going on, and get everything, I guess, dotting all our T's, dotting all our I's. We just need a plan of, deferred maintenance in the apartments, because I think that's one of the first things that we need to roll out for customer confidence, tenant confidence. They don't see nothing happening. They just see another program, property manager. That's just one thing. They need to see.
But Dante, at closing, there was not any outstanding work orders, I don't think.
We had 4. We had 4.
Okay.
We had 4, and then I talked to Rose last week. There was like about 4 or 5 more, and then people were talking about some things that are going on in apartments that I think we need to address immediately.
Okay.
But we are still trying to get that maintenance thing taken care of, because they're hiring a supervisor.
Well, that's something we need to talk. We need to talk to the property management company about that, because what does that look like for us on our books? So they're hiring a maintenance supervisor. We're responsible for a portion of the salary? I mean, the property's not big enough to have its own maintenance person. I don't think so. I don't think it's big enough. Plus, you were going to have kind of your team go down there.
Yeah.
So
trying to follow the law and getting them licensed is the issue right now.
Right.
But as us as owners, I would expect, or I would just think that we could. It was like, hey, we're gonna have to just do it this way first. If they can't find anybody within this next week, because they're gonna have somebody come down there and take care of these tenants. They got light problems, door problems, a lot of stuff that they should not be living with you know, us as new owners.
Yeah, yeah.
So basically, the previous property management team were kind of a little lax, it seems, or kind of weren't really doing that great of a job.
Yeah, they were older couple. I think the man was like 73, 74. She was like 62, 63. They lived in Canada. They are really not around the property that much. And they had you know, a nice young lady taking care of everything there. But yeah, they just let things go. And I think they just made it look good to sell and got it to us. And it's good property. I mean, it's excellent property. It's a needle in a haystack. It's a gold mine. They mismanaged it. We just have to manage it right. And once we manage it right, we'll build the NOI and we'll look good to our investors and everybody else, especially to ourselves.
For sure.
Or I might just be talking about me because this is my first one. But it's a good learning experience, literally. It's you know, every day, every corner is you know, a new obstacle to just solve. I mean, the challenge is there. Let's just go ahead and solve it.
That's right. That's right. Everything that you're learning on this property is going to be, you know, it's going to take you to the next level on the next deal. But yeah, I'm a little nervous about the income, you know, a little nervous about the income because we got to make sure to get the rest of those rents in so we can make sure to cover all of our costs.
Yeah, well, yes. I mean, this is just a lesson to everybody out there. I mean, I was from the school of, hey, you find the deal and the money comes. You know, now I'm on the other side saying, hey, get the money first and make sure you got all that taken care of because when you just have enough, it's just, you know, hey, sometimes just it's a little nerve-wracking, you know. So now I'm at the other side of just having enough, and it's like, okay, all right, I know what to do next time. All right.
Yeah. Well, that just goes to show the importance of nurturing these investor contacts, right? Nurturing these relationships.
Mm-hmm.
So, yep. So that they know what you're doing, and when the deal comes, the money's there.
Yeah.
Absolutely. I was just thinking, Randall, do you want to share the screen and kind of present the deal you're touring tomorrow and pitch it to us like we're investors?
Okay.
Are you in front of your computer?
Yeah, let me go ahead and
Yeah, why don't you do that? And then let's just, I want to hear you talk through it and talk through your assumptions and talk through, you know, how you got to the numbers that you got to.
alrighty. Give me 1 second. You see my screen?
Yeah.
Alrighty, so let me go ahead and pull up the OM.
And
So
this is from, oh, this is from Gria. Okay.
correct. So this deal that I've actually been looking at and going back and forth with is Village of College Park. It's a 80 unit, of course, in College Park, Georgia. Give me 1 second. Let me move it out the way.
1971. So that's old.
Yeah, but it doesn't have much work that actually needs to be done. I know more when it comes tomorrow, but definitely from what I received back coming from the actual. That's me or? Oh, okay, I thought
Oh,
there was
it's got
somebody
a
else.
Lura. It's low income. It's got a rental restriction.
Correct. To 2031. But all the units that's currently there, they're not pushed up to actual market.
Well, they can't be at
No, no,
market.
no, 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 no. To the HUD allowance.
Okay.
Exactly. So far as when it comes to the HUD allowance, they're not even nowhere near there as well. So it's definitely still a great room of meat on the bones for sure.
Okay. Okay.
I can show you right now too as well. I don't want to show you guys. So for example, Just on the 2025. That's where we are right now that we can actually push it up to. So for the 3 bedrooms, we can push it up to 1620. For the 2 bedrooms, 1418. For the 1 bedrooms, 1191.
What are they rented at now?
So for the 1 bedrooms, it's currently rented at 880.
Oh wow.
What's
Yeah.
60%, 50% on your?
So that is, because this has a low income this has a land use restriction agreement on it,
Correct.
which means that the developers at one point took some tax money from the
Of
government.
course. Mm-hmm.
And in exchange, the quid pro quo, in exchange, they limited the rental prices so that it could be more affordable. So it's an affordable housing deal.
Correct.
And
So it
so
also,
that's for the life of the property?
no,
No,
that's just 2031.
It's for 15 years. So they must have started in whatever that math is, guys, 2015, 2016, I guess.
Yeah, it ends in 2031. It has
Yes.
16 units inside of the property that's not, attached to it. So those can actually be pushed up to current market rent as well.
Really?
They actually do. And
Well, if we go forward with this and we actually own it until 2031, then we can go through what's called the qualified contract process, which is how you kind of release the LURA off of the property. And I mean, that's a process. It takes about a year or two to go through it. But then once you do that, then you can remove the LURA and bring the rents completely up to market rent.
right. So right now, I mean, they want 5.79 for it. I'm gonna come in for sure, probably around like 5.4 and see what we can negotiate from that point going forward. They're definitely 100% open to sell, and they're looking to sell sooner than later per brokers. Right now, on the 5.4, the investor IRR is 18.58%. Another thing that makes this deal attractive is because it can also qualify for CDFI. And that can actually assist with down payment. So
That's the community housing thing, right?
correct. So
Right.
yeah, that actually helps as well, because we can still, I mean, at least from what I did, my numbers, even if we went ahead and, we raised 15% from those guys, and then we raised 15% from the private side, whether that's high net worth individual or institutions, we can still, really be in a good space.
Now, Rado, look at your, so your going in cap rate is 8.1. Adjust that exit cap. Your exit cap needs to be lower than your going in cap. So that should be, that should be 7.75 to be conservative.
Let me open it up.
I mean, you don't really know though. I mean, you know, in 5-6 years what the market's going to be, right?
Right, but that's a reasonable market-based assumption for any underwriting.
So basically, like you said earlier, so the 50%, that means the rent is capped at what, at 50% of something?
Yeah, 50% of the adjusted gross income, or the it's like the average median household income of the area, and it's based on census data and stuff like that. So if the average household income is, $40,000 a year in that area, then they look at that and they say the rent has to be 60% of that amount so that people can afford it.
Oh, but that means the rent is probably going up every year then.
Yeah, the rents will be able to go up every year only. And I think, like, one of the things, like I said, that was very attractive to me is because the current property owners are not even, at HUD. And another thing that I like about that a lot as well, because, that's guaranteed income. And then the property tends to maintain at from what I was informed from the brokers and everything else, anywhere between a 91 to about a 97% occupancy rate. And yeah. Do you have any questions, anything, Todd, I can answer? Or...
Now, since you put that cap,
Sorry,
since you put that cap rate down, it jumped all
Yeah.
the numbers up.
You think yeah, it definitely did.
Yeah, it definitely it made it look a lot more juicy.
Right, exactly. Yeah, but
24%.
but Randall, that I would say conservatively, and guys, this is the time to buy. Like right now, cap rates are going to compress over the next, 3 to 4 years. So it is absolutely the time to buy. But I would say a conservative decrease is 0.25%, probably a quarter point.
Mhm.
So maybe Rand will go to like 7.75.
$22.
Still
Yeah.
juicy.
Mm-hmm.
So let's look at the other assumptions. So you got acquisition fee at 3%, closing costs. So this is 67 a door. Wow.
Yeah.
That's what they want for it?
They actually want, like I said, they want 5.79.
Oh, okay.
I'll just put in what I was going to actually start off on the offer.
All right. Scroll down a little bit. Let's look at your loan. So 3.78, 70% LTP, 63%, 8% is pretty high. Would this qualify for Fannie and Freddie? What's the occupancy?
The occupancy right now is at just shy of the 92%. And I put it at 8%. I put it just to be, overly conservative. I didn't want to bring it down. I know I had room to do so, but I was just looking for the worst case scenario.
Well, sorry, what did you say about
what, the 8%?
No, about Fannie and Freddie?
I said you asked me what was the actual occupancy rate. I said that it's right now it's just shy of the 92%.
Oh, okay. So it would qualify them.
Correct. I just put the 8% because I wanted to keep it high just to see, what it looks like from that point. And I mean, if we can get something under, then of course we get something under.
Got it. Okay.
Yeah, that's good underwriting right there.
How did you find the deal, Randall?
Oh man, just when I started building relationships with the brokers, he actually sent it over to me.
Is it? I guess it's not off market because the broker got it.
Exactly.
Got it. Okay.
So basically, when he put it on the market, he contacted you like to let you know, hey, I've got a new deal on the market.
Yeah, when I first received the first form of contact, he was informing that it was gonna go to market.
Okay.
And that's when I started doing it from that point. But I believe it's on market now. But they're definitely, like you said, the sellers are very interested. I actually got a walkthrough tomorrow. We were supposed to actually do it today, but they had an issue come up on the property, so we rescheduled it for tomorrow at 11:30. And yeah, see what's
You
what.
say you have a walkthrough tomorrow?
Yeah, at 11:30.
But I even think, but Randall, that 8% is even pretty high. I mean, if we're going agency.
No, I put it intentionally high.
Okay.
That was intentional.
Okay, gotcha.
Mm-hmm. Yeah, granted, I know this is definitely high.
Let's look at your rent roll. You put in that rent roll tab.
Give me 1 second. Let me move.
Is it in there?
Yeah, I did it.
There we go. Got it. Okay.
Oh, sorry about that, guys.
And then go to your cash flow tab. Got it. Okay. So is it cash flowing then day one?
Mm-hmm.
Do you know who the sellers are?
Where? I'm gonna look at my phone because I've also been texting. I believe I have that message in my phone. Give me 1 second. We have so many
Can
messages.
can you scroll down on that sheet?
Where to?
Yeah, just scroll down, keep on going. Yeah, come back up a little bit. There we go. All right.
Cash flow after
So
debt.
you're bringing in $100,000 of cash flow in the first year. Okay.
Yeah.
And then by the fifth year, okay, 5 million. Well, that's what the
The
sell.
same-
My bad.
so-
Yeah,
so
that's what the
see-
sell.
Or that's
So
the
so even when we start dealing with so for example, we deal with year one, we're gonna say 100,000 or the net operating income being 437, 166. That still would all depends on the renewals of the leases. Because if we have a decent amount of renewals, as far as when it comes to leases, I'm just gonna push all of them up to the HUD limit, which is gonna increase
Right.
that NOI, which in return will increase the cash flow, of course.
Okay. Now you can put that in the model, like you do the percentage of how much your income goes up,
Mhm.
or how fast you think you're going to lease it up if you go back to the
So
input tab.
I think for sure I can be directly on point. I would say again, of course, it'll go based off of how many leases we have coming up for renewal if we can actually get this deal done and closed. But I would say for sure by year two, we should be, rocking and rolling
Okay.
for sure. Because again, we're just going strictly off of, HUD and going off what they actually allow and what they're willing to actually pay.
Okay.
So it's kind of not really like more so of a guess game when you start going from that aspect. And like I said, what made this deal more intriguing was the fact that the current owners has not, for whatever reason, they were not pushing it up. And a lot of it, from what the broker actually told me, had a lot to do with them being more of a hands-off operators and not really, I guess, fully focused in the game per se. So
Okay.
Yeah.
but I have more information for sure
There-
tomorrow.
Yeah, we'll need to know, and if we get into this one, we'll need to look pretty closely at the Luro requirements, because a lot of these, and I'm actually going through. I've done a bunch of these. I'm doing one in Texas at the moment right now, and they're good deals if you can make money with the restricted rents, and ideally by 2031 we would lift the restrictions and go full to market.
Of course.
But we'll have to see what kind of shape the property's in, because Department of Community Health, DCH, they will come out and inspect.
Of course.
If there's a transfer, like this transfer of ownership, they'll come out and do an inspection prior to the transfer, and we'll cite all these things that need to happen.
Yeah, I know exactly why, especially because I did it before, but more so on single family, and I know on multifamily it's a total different game.
Yeah.
So that's one of the reasons why I actually wanted to go ahead and do my walk and everything before I even officially put in the LOI.
What time is your visit? 11:30.
Yep.
Oh, that's right. Okay. I have to watch the baby, but maybe I'll bring the baby to the property.
Okay.
He won't care. He'll be sleeping. Go to your summary tab.
You can still see my screen, correct?
Yep.
Okay.
The sponsor equity about 218 grand. Other equity about about 2 million. So all in, need to raise about 2.3. Call it.
Mhm.
Um,
Because I'm looking at it like this. If we can, so we're gonna say if we had to raise 2.3. If we can, you know what? Matter of fact, I'm gonna save that one. I'm gonna table that for another time.
what's that?
No, disregard.
Okay. Got it. Yeah, man, that's a good look. That's a good looking deal. Now, if you want to play with the hurdles, go back up. So, guys, I don't know if you saw this, but if you want to play with, scroll down. Well, I guess it would be in the
Waterfall.
go to the waterfall tab.
Yeah, exactly.
Because right now this is a a 90-10 deal with the promote structure of investors get, basically it's 90, each dollar is split 90-10 until the investors have a 10% IRR, then it's split 80-20 up to a 12%, and then 70-30 up to a 15. And after 15, it's split 50-50. And you can play with this tab when you're underwriting. You can, if you want to do 100% to the investors, so if you want to, Randall, change that 90 to 100 just to kind of play around with it.
Yeah.
Yeah. That's 100% to investors up to a 10. Then it's split 80-20, 70-30, 50-50. Let's go back to see what that did to your dashboard, your returns, go to your inputs. Bumped up a little bit, right? Yeah, bumped it up a little bit. 23%. You got vacancies at 5%. Now go ahead and put vacancies at 10% just to see, this is called stress testing a deal.
Yeah, that's what I had it at first.
Yeah. So now we're back to 19%, but still very healthy, right?
Right.
Very
I got a
healthy.
quick question. I got a quick question I want to ask you, Todd.
Yeah.
So what are you seeing on interest rate right now? I guess agency. I'm just curious.
Yeah, I mean 5.5 to 6. Let me see. I just read something recently.
24%. Oh, something else I want to show you guys as well.
Now, do you have any CapEx or anything like that added to the deal?
Yeah,
like repairs, because like this is a heavy lift because of, I guess, the restrictions. Like they come in there and
See, I didn't add that in yet because I wanted to do the property walk.
right.
And then I
Okay.
got
Got
some
it.
form of an estimate on that.
Yeah, so right now the Freddie Mac up to 80% LTV
Okay.
up to is 5.43%.
Okay.
About 5.5. Yeah. So you changed your rate to 6% there. Okay.
Yeah.
Yeah, I think 6 is pretty safe on a Fannie Freddie. That's for a 5-year loan. 10-year fix is about 5.65%.
Okay.
But good point. Go to CapEx. Let's just see, what does the broker say as far as how are they pitching? And so that's going to increase how much capital you're going to need to raise.
Of course.
Right.
Of course, from what the broker is telling me, he says it's really not requiring much work. But of course, they always say that. And then of course, the pictures doesn't mean anything until you go out to the property.
Right.
So that's why, like I said, I wasn't even going to send you this. That's why I was telling you I was going to wait until you go out to really see everything. And then from that point on, I can go ahead and add the CapEx and everything else and then send that over. That's what I was
what do they say on their offering memorandum as far as what's due, I guess, or what's required?
Sorry, I got a habit of opening too many tabs.
Yeah.
That's not a habit. That is a trait of a genius.
You know what? I'm gonna take it then, Dante.
All right. Oh, so hang on. So interior value add, the market rate units are currently in classic condition, renting at the same price as affordable. So how many the market rate units
16.
are 16?
Correct.
Okay, so you got at least, so are the rest of the affordable units have been upgraded?
I want to say I believe they all in the form of classic.
But look, it says converted to LIHTC in 2001, the property was treated as significant rehab. So I wonder if they've already done all of the upgrades.
See, that I don't know. When I seen like some pictures on here, like the unit didn't look beat, but like especially like if we were speaking on far as the market units, more so like stainless steel, changing the appliances.
That's LVP flooring. So
Yeah.
they got better flooring.
I mean, if they all look like this, it wouldn't be a heavy lift.
Right.
But again, we would know tomorrow because, of course, this is the best picture possible. But I mean, I can even look at this light fixture and tell that it's definitely classic.
It looks like there was that a washer and dryer hookup at the end of the kitchen.
Right. Mm-hmm.
Okay.
So you can easily add that in as well. Okay.
It has a good mix. How many one bedrooms does it have?
One bedrooms is what is it, 11 or 12? Let me double confirm for you guys, so I'm not just guessing. One bedroom, there we go, it's 12.
12. Okay.
Correct. Two bedrooms, 56, three bedrooms, 12.
Oh, yeah, that's pretty good unit mix.
Mm-hmm.
Yeah, I agree. Because you don't want to have too many one bedrooms, right, guys?
Absolutely not.
We learned that from
Remember the other property that we looked at? The whole entire property was on one
Union
bedroom.
Station. 88 units are on one bedroom. Although one of my good buddies is buying it.
Okay.
They just see some value that I don't know. They're just more confident on the exit.
Yeah, I think we looked at that deal too, and that was the very first thing I looked at. I was like, oh, all one bedrooms. I don't even want to look at it. Yeah, it's quite all right.
Why don't you like one bedrooms, Dante?
Because of it's a family dynamic. One bedrooms, people are usually going to move out. Or there's like three people in the, I don't know. It's I would rather have more two twos and two threes because we're building a community, and I don't the single people. I'm good. I want families, so that's my answer for that one. And Todd, I think your mic went out. Yeah, your lip syncing. We should all make up something what Todd is saying right now. Oh my God, I can't. What's going on? Can you hear me?
If I stop sharing, that can probably help.
He has some technical difficulties.
Is it working out for you, Todd?
He'll come. Hey, just come back in.
I think if he goes out, we all go out.
Well, if you what's it called in another browser and then incognito bring it in, and he'll be another Todd Robinson over there, and we can hear her. But I like that deal, Randall. But that the HUD or the what's it called the
Yeah, it makes
affordable
like Section 8
housing.
look like. Yeah.
The affordable housing. I heard it's a lot of heavy lifting just to be able to do it the right way.
Yeah. One thing I can say, I guess, what kind of helped me is that I actually have experience with affordable housing.
Okay.
So from a management side, so it's not really, overly out of the ordinary for me. It's just more so, really wanting to see the property and see the condition so I can see how much of a lift that we actually, have to, push in order to make sure that when we do go through the process of closing that, the affordable housing will clear us so we can keep things moving forward. But what I would say on this deal that was really intriguing was the fact that the seller was not, pushing rents up to what he could have.
Yeah. Can you hear me now?
Yep.
You're
Okay.
good.
Yeah, that's the reason why, and Ben, while we talked last time, we were going to maybe look at that deal up in Lawrenceville, but it's the rents are just too high up there.
Yeah, there's no room.
Yeah.
They're already over market rate. They're like sitting right over market rate, or it's not that they're over market rate, is that they already have all the rubs are already in the deal. So I guess you could probably move it up maybe $100, but it's already too high. They're paying all the bills with that.
Mhm.
with
But it depends on the
everything.
price. I mean, what if we had bought it at 9,000 or nine? Was it nine?
9 million.
Um, 9 million? Yeah.
I mean, yeah, the lower the price you go, I mean, it'll be a better deal. I think for me, for that one, I would say for a stabilized person that is not trying to do a value add, that just wants something that's cash flowing, you know, I mean, I guess like it's like a home run. Like, oh, okay, it's already doing what it's doing, and you're not really going to raise the rent. You're just going to keep getting what you've been getting from it, and through attrition, the price
Right.
will go up, and you can sell it for a little bit more. But it's not like you're going to be selling it for a whole bunch. You're getting that for the cash flow. It's stable. So it's like it is a good deal, but my buy box is I'm looking for a value add at the moment, and
Be-
and that's
Because otherwise you won't get the IRR to the investors, right?
yep. Yeah, that's why I said it's for somebody that's already stable, someone that's like, willing to like own the
Yeah.
property.
If they're looking to
Since
just park cash somewhere.
yeah, like me syndicating that deal is not gonna make any money. If I find 1, 2 people that want to get in the deal with me, and hey, we buy it out, outright, and give the seller what he wants. Oh, it cash flows, you know. And I know there's some type of operational efficiencies that could be done in that property to bring down the operation so the NOI goes up a little bit more. But I mean, uh, yeah, I'm just looking for a value add deal. So I might have been biased when I looked at the deal. So now that I'm thinking about it.
Um, well, awesome, man. Well, Randall, let us know how it goes tomorrow.
Most definitely.
Post it in the school platform, and then keep me posted. I don't know if I'll be able to meet you. I'll try, but
No, it's totally fine if you can.
yeah.
I definitely make sure to take all the notes and keep you updated.
Yeah, absolutely. It's at 11:30. Yeah, I'm not 100% sure, but I'll but keep me posted.
Most definitely.
So you're flying, Randall, to
Yeah, I'm a
Georgia?
flyer. Yeah,
Yeah.
flying in the morning. I actually was supposed to be out there today. It's crazy. I was actually just in Georgia. I was in Georgia since Wednesday up to Sunday, but I was in a small town called Dublin, Georgia. That's where my
Oh
family's
yeah.
from. So I was out there for all that time, and then I came back down to Miami, and I was gonna fly back up today, but we changed things, so I'm just shooting out there tomorrow.
Who's in Dublin?
My family.
Oh, everyone's in Dublin, huh?
Yeah, I have my family is actually from Dublin, Georgia.
Oh,
My
nice.
my grandparents was born there. They have 125 acres down there, so we have like a family estate,
Okay.
and yeah, we go out and spend a great deal of time.
Awesome. Sounds good, guys. I have to run, and I'll be in touch with each one of you individually, and let's keep on. I like this flow, though. I mean, I think Benoit and Eugene and Reggie and Dante. Let's get another deal that you guys are looking at, and kind of present it, and let us kind of ask questions, and it's a great way to kind of continue to learn and continue to stress test deals and pitch prospects. So I think it's a good flow.
I'm trying to convince Johnny and Haley to maybe look into outside of Georgia right now.
Oh, really?
Yeah, because what is it? When I went to the CBRE multifamily,
Yeah, Nashville.
they gave us like 20 cities, or 20 or maybe 15 cities that like is like trend or like growing in population. And then I was just like kind of looking around there, but it seems like they're very like core plus, or like just core.
Well, and part of that too is when you're describing deals to the investors, and let's say we go, you want to do a deal in Biloxi, Mississippi. The first question the investor is going to ask you, well, who's in Biloxi? Oh, it's a great deal. We have a property management company. Don't worry, property manager is going to manage it. you know, some investors are fine with that. They're like, all right, great, here's my cash. But some investors were like, well, either they want to go see it personally and it's too far for them to drive, or you know, or they want you to be close by, right?
Right.
So I think it depends on a lot of investor preferences. But yeah, I mean, but you're right, Eugene. I mean, there are a lot of good deals in other states that would be good to consider. Well, you know, I've got one, you know, we've got one in Florida that I think Johnny wants to go see, you know, maybe next week. In did he tell you about that one in
The golf course one?
yeah, no, Port St. Lucie. It's an entertainment development.
Right. Yeah, that one.
Yeah,
Yeah.
Port St. Lucie.
Yeah. With the alcohol rights, right?
Yeah, exactly. Yeah, so they have exclusive rights for food and beverage for the next 50 years.
Yeah.
In this, like, it's a venue, entertainment venue, and Port St. Lucie, Florida, right next to like the Botanical Gardens and the Children's Museum. It's like the only entertainment district that the city has they put in, you know, probably $10 million into developing it.
Gotcha.
So yeah, I think he wants to take a look at that one too when he gets back.
Well, he's getting back today.
Yeah, is he flying in today?
Yeah, I think 10 p.m. or something.
Oh wow, okay. So then he's going to be out of commission for 2 days because of jet lag.
Yeah, jet lag.
Right. So
Yeah.
So I guess, do you personally walk every property you're pursuing, even if it's a state?
yeah, 100%.
Okay.
100%. I mean, I would absolutely require that / recommend require it, because you just, you know, you want to know what you're buying. You know, you don't want to, you know, you want to make sure it's legit. And, you know, because listen, the whole concept of caveat emptor, right? That is Latin for buyer beware. And it's a axiom that is so true in Georgia real estate, but it's just, you know, that's how real estate deals are done. You know, buyer beware. It's up to the buyer to do their due diligence on the property, right? Seller has duty to disclose some things, but otherwise it's buyer beware.
Yeah, all too familiar with that.
Yeah, exactly.
A
Right.
couple of stories there on both sides, but
Yeah.
yeah.
Cool, guys. I will be in touch shortly. Have a good night.
Okay, y'all.
Thanks, guys.
Indeed.
Bye.
Bye-bye.
Bye.